So today we are going to talk about factor investing. What is it and how it can enhance your investment journey. So factor investing is a type of investing through which you identify certain characteristics of stocks which will help you in identifying stocks that can outperform the market in different scenarios. So we'll be unraveling how we can incorporate factor investing into our investing strategy and use it effectively to build interesting portfolios. So let's try to understand what is factor investing. Factor investing is like a secret map through which you can find out stocks that can outperform the market. And there is no one definition of factor, right? So a factor is anything that will help you understand how to identify stocks that can outperform. To give you an example, a lot of investors try to do value investing, right? Which means picking stocks that are undervalued because anything that has a lower value will appreciate in price, right? So that is one type of factor which you call value investing. Then you have a lot of different factors. Some people are picking quality stocks, stocks that are very high quality of management, high quality of earnings, and they think that will appreciate. Similarly, somebody is looking at a growth. And then there is momentum investing or trend following, which is a very, very important factor which is out there in the India market, and that is based on picking stocks that have picked up the trend. So, all of understanding all the different forces that influence stock market performance and finding something that is not out there is what factor investing is all about. So first factor we'll talk about is the momentum factor. Momentum factor is more of a technical factor. It's not based on fundamental, it is based on price performance. So momentum investor believes that any stock that has picked up a pace will continue. So it's like that physics law that anything that has a moment will continue. That is what momentum investing means. And it sounds a little strange that all of these companies have fundamentals and their financials that should govern the prices, but why are we just investing based on price? So this factor is based on investor behavior, right? Investors across the market, whenever they see that any stock that has picked up trend, or you start getting WhatsApp messages about a particular stock, it becomes popular, a lot of people jump into it, and that causes a trend, right? So momentum investing is trying to pick up stocks that have picked up that trend, ride the trend, and then sell it at a reasonable price. So that is what momentum investing is about. And what is very interesting is that momentum works really well in India. In the India market, if you look at the past few years, momentum has been the best performing strategy out there. So while momentum investing is the most popular factor, and a lot of Wright research customers subscribe to our momentum investing portfolio, but then there are a lot of other factors out there. So I'll tell you about my journey when I used to work on momentum investing back in 2016-17. And I was young and I used to think that the market is only going to go in one direction. One fine day, momentum investing stopped working and there was a momentum crash. And then we were trying to figure out, what will work now. So that is where we discovered that there are so many other factors that move differently than momentum investing, right? So to give an example, one is value investing. Value investing means picking undervalued stocks. So obviously it is almost opposite of momentum investing, right? So that is one more factor. You might be looking at P ratios, PB ratios, or a number of other ratios to identify undervalued companies. Some people actually do very deep analysis to understand the valuation of a stock and then invest based on it. That is also one type of value investing. Then there are other factors, like I said, quality. So in India, quality also works really well. So stocks like Asian Paint, Pidilite, which are massive stocks, very consistent. These stocks are your quality stocks, right? So these are some of the popular factors. Looking at growth of the stock is also very important. Some people even just bet on stocks that are moving slowly, like that have very low risk. They think low risk will keep me happy. So that is low volatility investing. So these are all very interesting factors, strategies. What we also do is try to identify factors that are unique, right? Let's say inflation is rising. So how inflation impacts a stock, that is factor based on some macroeconomics. Similarly, how does promoter holding, how buying and selling by the promoter affects the stock. That is another type of factor that we try to look at. So talking about safer strategies in terms of low volatility investing, let's say. So typically, if you look inside that, you will see a lot of FMCG companies, right, which move very slowly, but tend to be very stable. They don't move very wildly up or wildly down. They are very, very safe. and those are the stocks that tend to come into those portfolios. So factor investing is not just about numbers. There's also a lot of market psychology that comes to play, right? So we talked about momentum investing, which is actually driven by behavior. It is based on investor behavior, right? That investors are irrational, they're not rational. So that is a core of it. Similarly, trying to understand which factor to bet on, where to actually allocate, is also a big psychological game, right? If I think that okay, today market is overvalued and I move to safer stocks, but the market doesn't stop, then I would be underperforming, right? So psychology is a very important piece that you have to understand when betting on these factors. Similarly, when you're offering it to investors, you have to understand their risk profile, right? Will this factor actually be comfortable for them? Will momentum investing, which can move up but also down, be something that they'll be comfortable with? So you always have to understand the psychology before you allocate to these factors. So factor investing is a very important part of portfolio management, right? As a portfolio manager, you are trying to do the best for your client, trying to pick the best stocks for your clients, right? And obviously everybody wants good returns, but you also have to cater to their particular risk profile. So I use factor investing as the core tool when trying to do portfolio management, right? When the markets are good, then looking at momentum stock, momentum factor is extremely interesting. But when the markets are volatile, how do you allocate and move to different other factors and reduce the risk? That is extremely critical. Similarly, for one type of investors, maybe a very high momentum allocation makes sense because they know the market, they're comfortable with the risk. But then for another investor, you have to create a different mix of factors because maybe a high risk strategy does not suit them. They have to have a much more diversified exposure. So for us, portfolio management, factor investing is a core part of our portfolio management philosophy. We try to look at anything from the lens of factors. How does how much exposure to momentum is there or to another factor is there, and that's how we sort of approach. So let's talk about the risk associated with factor investing. Obviously, see, it's an equity strategy, so there is always risk, and different factors will have different risk in different scenarios, right? In a bull market, momentum seems to be low risk and high return. It's just moving up and it's giving you wonderful performance. But when the moment you see that the market shifts to slightly higher risk, you will see sharper correction in the momentum strategy, and that is something that you have to understand. So we always believe that creating a diversified basket for momentum or for different factors is core because that reduces your risk. Similarly, combining different factors also reduces risk because momentum will move in one direction, another factor will move in another direction. So your portfolio will have a much more stable risk profile if you are combining different factors also. And then when you're betting on these strategies, always make sure that you're picking across sectors and industries. You have your risk checks in place, right, which help you check for any liquidity, any sort of risk event that is happening on the stock. So all of this is important when you're trying to build factor investing portfolios, and risk management has to be on the core of it, despite whichever factor you pick. See, factor investing opens up a whole new realm of possibilities. Right, it makes your investing process much more informed. Like I said, everybody is doing factor investing, and it helps us understand, what our approach is and what are the scenarios where it will work the best and where I need to change my approach. What is very important is that you also put importance on risk management and diversification when betting on factors, because that will give you a much more stable returns. And I think factor investing is a tool which can help take any investor's portfolio to the next level, whichever approach you want to follow. So I think people should dive into the world of factor investing and turn their insights into better decision making with the help of factor investing. So I hope this was helpful and insightful, and you learned a little bit about factor investing. If you like this content, please do go and hit the like button, subscribe to our channel, and write in the comments what you would want us to talk about next.